Well, hello traders, welcome to Apiary Fund's live this week. And talking about or thinking about what we're going to talk about this week, I wanted to kind of get in the spirit of like the Wobble boot camps that are going on. We have one going on this week. And also thinking about, Shawn hasn't been on these YouTube lives in a long time, and quite frankly, because he's just been extremely busy at these boot camps, at these events that he's been putting on and going. Traveling cross country. In fact, our next event, our next stop is going to be February 20th in Dallas. So if you're in the Dallas area, look forward to some information hitting your inbox about the Dallas rally. We're going to spend a whole day. Shawn's going to teach you how to trade. I'll be there helping you guys trade as well. But coming back to today and what we wanted to talk about today, I thought it would be kind of really kind of nice or interesting to get kind of Shawn's thoughts, his views on what it is to wobble, why wobbling, and what he is doing to kind of help push everybody to become a better trader. And so I know that I wasn't going to be able to get him on right now or today during this time slot because he's probably teaching over at the boot camp. And so last night I kind of snuck over to the hotel and we sat down and chatted, and I wanted to play that with you guys here so that you guys can see and hear from Shawn and get a couple, ask him a couple questions. Hopefully you guys will like it. And quick question for you guys as you're watching this video. If you have questions or you have aha moments, or go ahead and post them in the comments and I'll get to them and answer them. Because at the end of the video, I'm going to talk about the 3 things that I pulled, or the 3 things that I learned from watching that video, and that I believe that every trader needs to know when, not only just when wobbling, but when trading. And so look forward to that, and we're going to go ahead and play that interview that I had with Shawn right now. So go ahead and play, and we'll see if we can watch that. So I'm here with Shawn Lucas, head trader of the Apiary Fund and founder of Trader on the Street. And I actually find it a privilege and an opportunity to sit down with you whenever I get the option, or whenever I get the chance to, because I know that you're a busy guy, and you're always helping other traders out, particularly this week. And I wanted to kind of steal some of your time if I could, and I appreciate it.
Yeah, it's 7:30 on a Tuesday night.
I know, and the funny thing is that he is getting up at 12:30 to trade with the traders here. For those of you guys who've been in boot camp, know what that's all about. So I'd rather get him tonight than tomorrow.
Way better tonight than tomorrow. Yes, great.
We see when he has a smile on
I'll
his
smile
face.
tonight. Tomorrow I'll be like.
But that's kind of your crazy schedule, I mean, you are always, if you're not trading, you're teaching, right?
True.
And so thank you for giving us a little bit of your time to kind of share with the people that may not be able to come to a boot camp or have had the opportunity to attend a boot camp. And so I was thinking about this just today. It's like, it would be awesome to get a little bit into the mind of Shawn Lucas, get to know him a little bit more, and why he does what he does, or why he's put the boot camps together. And so, since 2011, you've been a champion, the Apiary Fund. Trade my money. Let's take this journey. I'm going to go ahead and let you have some of the fun, trade that, and let's build the fund together. And that was kind of your journey since 2011, is finding traders or people that want to trade, teach them how to trade, then give them your money. Well, Trader on the Street was born, came to fruition a couple years ago, where we actually started putting it into motion. And so a lot of people will ask the question, why Trader on the Street, or what's the difference between Trader on the Street or Apiary Fund, and why bring Trader on the Street to life? And so I wanted to kind of share, or ask you the same question, so that you could share that with people, so that everybody kind of understands what that next chapter looks like. So let me ask you the question. So tell me a little bit about Trader on the Street, and what is so unique about it that everybody is trying, kind of coming along the journey with you?
No, it's a great question. I mean, for years and years and years, it was just the Apiary Fund, right? And being the head trader, being the creator of that fund, you know, you kind of get a name for yourself, and you know, people knew me as the Apiary Fund and the head trader at the Apiary Fund. So why now take this shift and, you know, spend all of this time and energy on Trader on the Street? And, you know, there seems to be a disconnect maybe in the minds of some people. I could see that happening. But it's a real simple, the purpose for the Trader on the Street is just a real simple purpose, right? Wall Street is highly successful at the things that they do, right? Well, what is it about Wall Street that makes it successful? And is it something that Main Street can do, right? Yeah. And through the Trader on the Street brand, or through this project that we started, you know, a couple of years ago, my goal, my purpose is to show Main Street that the things that Wall Street does aren't that unique. You know, that it's within the grasp of every single person out there. Yes, it's a new world. Yes, you have to learn a new term, new vocabulary, new way of thinking, new way of managing things. You live in a world of probabilities, not constants, right? And so you have to learn all of these concepts, but it's within your reach. And so every week, you know, I literally bring someone on stage with me, or on in front of the room, and I show the world that you can do it. You know, I'll coach a person, I'll walk a person through the entire process, start to finish, a trading session where they're able to walk away, you know, in that session making more money than the average person makes in an entire day at their jobs. And I think that message is what resonates with people.
You know, since I've watched, you know, I've been a part of it since the get-go, of seeing that journey or the evolution of the Trader on the Street. You know, one of the things that I can honestly say is that, well, making money in that trading session is, you know, it's a goal, right? You don't want to have a losing session. That's not the only goal. I mean, the main goal, the main focus is teaching that individual and the viewers that you don't have to be somebody that's been in the pits or stock market, or you know, wearing a suit and tie, so to speak, in order to actually pull money from the markets, you know?
Yeah, and that's so true. You really, you know, it's a process, right? Once you learn the process, you do the process over and over and over again, right? So it's not a function of how much money you have. It's not a function of how good your strategy is. It's, do you have the processes in place to produce consistent results? Mm-hmm. And yeah, anybody can come into this industry and hit, you know, a Tesla. Like today Tesla just went out through the roof.
Sure.
Like, you know, yeah, some kid off the street can hit the Tesla trade, right? But can they do it again tomorrow? And can they do it again the next day? You know, that's a little bit more difficult for most people to do. And so what I try and focus people on is the process for doing that. You know, you don't need to hit a Tesla every day. If you have a process that produces consistent results today, tomorrow, the next day, and so forth. And so that's what I show people here.
Yeah, I mean, I'm just going to pick up on the word that you keep saying, and that's consistency, right? Mm-hmm. And I think that a lot of traders, well, retail traders tend to struggle with that, right? Because they don't have, they may have a strategy, but they don't have a process or a technique, if you will, you know, of doing it over and over and over, right?
You've keyed in on something that I'm really big on: strategies versus process, right? A strategy is really simple, and yet that's what everybody wants when they come into this industry, right? They just show me the strategy. You know, first of all, they just want you to show them the trade, right? Yeah. But then they realize, oh, nobody's really good at sharing the trade, so what's the strategy? You know, tell me where to buy, tell me when to sell, tell me when to get out, right? So they want these strategies. People spend thousands and thousands of dollars trying to find a strategy that works. Well, a strategy is good, you know, 50, 60% of the time, but that's where the performance stops, right? So if you're one of those few traders that is willing to put in 100 trades, you're going to win 60% of the time, 60 times. You're going to lose 40% of the times. Well, most people can't handle that, right? They don't know. They don't enjoy losing that 40 times in their session. And so, where performance really takes a leap in the right direction is if you can take that 40% of the time when a person is losing and turn them into break-evens or turn them into wins.
Sure.
Right? And that's where process comes in. So a strategy is going to yield 50, 60% of your success. Your process is going to pick up, an additional 20, 30% of your success. Well, now you're looking at, 80, 70, 80, 90% success rate. Those are numbers that people can live with, right? Those are numbers that if you have 10 losses out of 100, people aren't going to freak out, if that makes sense. Where they might if they take 40 losses out of 100, to say if that makes sense. So process is key.
Yeah.
Right? Turning those 40 losing trades into break-evens or even wins or even mitigating those losses, that's key.
That's something that I think every new trader experiences or will experience at some point in their trading is those big losses, right? The big losses. And I think having a process in place helps, helps to mitigate them. You will still have them occasionally, but if you can mitigate that or that exposure, and so that kind of taking that a step further, if I can be presumptuous, that's exactly what's going on this week, right?
That's exactly what we're talking about. We've spent now 2 days discussing the process, right?
Right.
We call it the Wobble Technique, right? The Wobble Technique. But really, it's a technique, is a process. It's how you do things, how you execute strategies. So we can take any strategy that exists out there, any strategy, and we can apply the Wobble Technique or the process to that strategy, and we can improve that strategy by 20, 30%. Does that make sense?
Yeah, absolutely.
And so that's the process that I'm taking these traders through this week. We started out Monday right off the bat with a trading session where I demonstrated the technique in live market conditions. This week was unique because right in the middle of that session, the market had hit a news event, and it took us, right down through into our fix-it mode right off the bat. But that was good, because right off the bat, we were upside down. And this group, this group of wobblers, if you will, this group of wobblers, they saw the turn around. Does that make sense?
They saw how you get in trouble. Everybody does.
They saw me get in trouble. They saw me work through breaking even on that trade. We were upside down. We came to break even. And then we set up another trade. And that trade took hours, of course, right? But that trade took hours to kind of mature and develop. And eventually, by the end of the day, we were up, $700-800 on the day. And, to be able to turn that day around was just a perfect demonstration of how the process works.
One of the things that I've seen, again, just by watching and kind of rubbing shoulders with some of the traders that are here, is that, and I heard it tonight at dinner time, was they keep saying, I'm just grabbing a bunch of those aha moments, right? And they're just like they're seeing that it's a process, right? It's like, if this happens, do this. If this happens, do that. And not all trades are going to work out the same way, but if you have a process like we keep talking about, or the Wobble technique that you can draw on, that's just going to help, again, to manage your risk, to manage your losses, and honestly, going all the way back to what we just talked about, is being consistent in the market,
Yeah, I mean, the Wobble technique is kind of an adaptation of techniques used by professionals in the industry. Like, if you think about like a pit trader, someone who trades in the pit in New York or Chicago or something like that, you know, they don't have the luxury of sitting there at a computer analyzing every step of the trade, determining that precise moment when they should enter into these trades.
Sure.
It's not that sophisticated, right? They're down there, there's yelling, there's screaming, there's punching, you know, they're trying to get their trades through. Meanwhile, prices are going up and down all around them. They don't have the luxury of like, ooh, right there. That's their perfect trade right there. No. What do? They just blanket the market, right? Buy, 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 buy. Meanwhile, the market's dropping, buy, 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 buy. They know the levels at which they're going to stop buying, and they stop buying there, right? Mm-hmm. So what they're doing, in a sense, is using a technique or a process for managing money in the pit, where they don't have the luxury that we have of finding those precise moments where everything should work out, you know, 70% or 60% of the time. They know where they're going to be buyers, they know where they're going to be sellers. As long as they're in the ballpark, they usually come out at the end of the day profitable. Does that make sense?
Yep, absolutely.
That's one group. The other group is the portfolio managers, like the fund managers. I mean, these guys are managing billions of dollars in the market. You don't just go and throw, you know, a $500 million trade at Tesla and expect to get filled. You can't do it. So what do? They have a process for getting into these trades, building into these positions. Prices get into a certain level, they know their targets, they know the areas where they're getting out. So they start to peel off some of those positions. A lot of the basis of the wobble technique is rooted in just these very basic principles used by both the floor traders, the pit traders, and by portfolio managers. I mean, it's just...
So previous to you trading maybe the wobble technique that we know it today, you were probably trading something similar to how those methodology or whatever, that style of trading. You were kind of doing
Technique.
that, right? Technique. Yeah, thank you. So when was it, or when about did you have that light bulb for you, an aha moment that said, oh, I could do this? And then I know, but I'd like people in the other end of this who are watching this to know, when was it that you actually coined it the wobble?
Well, as you know, you go search Wobble Technique in Google, you'll get 0 results, right? It's not a technical term.
Yeah, exactly.
In fact, I should have named it the Drunken Stagger down Wall Street, right? It's like...
There'd probably be more searches on that.
Probably get more hits, right? The wobble technique obviously is not, it's just something that we coined, you know, within our culture, within the Apiary Fund.
And I'm going to stop you right here because I think he coined a new phrase while we're talking here. So we got the wobble technique, and the people who trade it are now called the wobblers. It's the new phrase. You're like, oh, you're a wobbler. So
this is how names take root.
Yeah.
So anyway, I think I was in a trading session at Apiary Fund, you know, and I'm trying to explain because the market is just kind of grinding against me. Uh-huh. And I'm like buying a little bit here, and then I'm buying a little bit there, and then buying a little bit more, and I'm trying to explain to the group what I'm doing. And I was like, and they're not getting it, right? They're like confused. Why are you buying it? The market is trending lower. I'm like, well, I'm just trying to build a position. I'm wobbling into a position. I don't really know where I want to buy it. I'm just kind of wobbling into it, a little here, a little there, and it seemed to take root. I think people kind of could appreciate the concept of wobbling into a position. And actually, you know, after that trading room, I thought that's pretty accurate, you know, because so few of us actually know the precise time, the precise moment to get into a trade.
Sure.
Really, we all kind of just wobble into it, you know? We don't know the right place, so we try and find the best price that we think, and most of the time it's not the right price, but if you wobble, you know, a little here, a little there, then you can kind of massage the right area. And I think that there's a lot of validity to that concept. I'll never forget, you know, sort of for me, the aha moment is I'm sitting there, you know, this is early in my trading career, very early in my trading career, and I'm studying 3-bar reversal patterns, right? Yeah. So in a 3-bar reversal pattern, you have a defined trigger point, you have a defined stopping point, and everything in between is your risk, right? The point you get in, the stopping point, anything between that is risk. Well, sometimes that's very small.
Sure.
Sometimes it's very big, depending on that apex bar.
Right.
You know. And I'm like, man, I wish I could reduce the risk, and I wish I could get in at a better price, because I know sometimes where that market's going to turn. And it occurred to me, well, why don't you take your position, you know, one lot, say, divide it in half, get in where you think it's going to turn, low probability, right? But also low risk, you know, because if that apex bar holds, your risk is relatively small.
Sure.
On that first half of the trade. And then use the other half to get in when the trade actually triggers. High probability, but higher risk. And so it's like, whoa, wait a minute. That was kind of ingenious, right? Like, not patting myself on the shoulder, but I mean, for me, it was like, oh
that
my
aha
gosh.
moment, right?
Because I found that, you know, I could get in at better pricing. I could really manage my risk fairly effectively, but at the same time, you know, it's a lower probability trade, but I'm not putting all my eggs in that basket at that point. And so that was like, oh, what if I just start splitting up this lot into a bunch of small pieces and then scattering it around that area? Oh, you know what? I started noticing more ability to control my risk, greater capacity for income. Probability was managed probability was managed through the process, as long as I was able to get out, you know, when those stops hit. Mm-hmm. It was just a real eye-opening experience for me.
So I appreciate that, you sharing that with us, because I think that it's important for us to kind of know that you kind of found what you found success in, or you had your aha moment. You're immediately turning that around and sharing that with everybody. You're not just holding it as your safeguarded secrets and like, oh, you're letting people know, right?
Yeah, well, I kind of did hold it. If you ask a lot of the old Apiary Fund, a lot of the bees in the Apiary Fund, they'll know that they'll see this transformation, you know, of what we taught over time. And it wasn't until probably 4 or 5 years ago, maybe 3 years ago, that I started to introduce the technique. In the beginning stages of Apiary Fund, it was all about strategy, you know, because that's the process most people are used to.
Right, I can see
to learning.
Give me a strategy, right?
That's what they wanted, so that's what we were delivering in the beginning stages. But it wasn't until I actually started the Trader on the Street where I'm like, oh man, I can't take a strategy and in one session get the consistency out of the strategy to yield a day's worth of income.
I actually remember that conversation. You and I having it. It was like because our goal then was to create more income in 1 hour than an average person makes in an entire day, and that's what we were like. Okay, let's go see if we can do that. You know, kind of challenging and putting the challenge out there, if you will. And I remember you saying, you know, you have to do this, this, and this in order to do that inside of 1 hour, putting that hour time constraint. And now, you know, fast forward a couple of years, we know that you can't tell the market that you're gonna trade for only an hour and be profitable, right? Because sometimes the market does that. And so, but one of the things that I find simply remarkable is the consistency that you have had with each trader on the street session, right?
Yeah.
And that's the remarkable thing.
We've taken some hits, but even though a session may be down, I have yet to experience a loss on a day.
Right.
Like I've taken a couple of hits in a trading session, but I've yet to lose on the day. So usually I'll kind of massage it and come back around and pull them up. But we're 68 sessions into
68.
this.
I was going to ask you that.
And to not, and at 68 sessions and 68 checks paid out to my guest traders.
Yeah.
I mean,
that's a phenomenal feat, you know.
It
And
really
I mean,
is.
I know that it's hard for you to say that because you know you're helping them along the way, but the journey is real. The journey is that you can take somebody, and I've seen it where that never placed a trade in their life. They can sit down with you, place all these trades, and be profitable at the end of a session, right? And then on the other side, you know, as I'm witnessing this week, we have traders that have more experience and that have placed trades, that have traded for years, that are still getting that aha moment and turning what I would consider, you know, borderline marginal of profitability and becoming more consistent, taking more profits. I was talking with a trader just today about how, you know, I mentioned that you would go for an entire week and you'd have positive days 4 out of the 5 days. And then on that 5th day, you'd blow your whole account. And they're like, yeah, that was me. And having this process has really curved them into becoming a better trader, you know? And so I guess you kind of, to bring this all together, and I don't want to take up all your night because I know you got to get up in a few hours, but there is one question that I would like maybe that you can answer to the camera. If you're a beginning wobbler or you're just being hatched as a wobbler, paint that picture. What would you say? What kind of advice? What kind of things would you say are something that if I just want to get started and I want to start doing this? I mean, I'm going to tell you before you even start, the best advice I could give somebody is watch his trade rooms on Trader on the Street every Wednesday or every month that we try to do that. But outside of that, what would you say is like maybe some key components or advice that you would give somebody that's just getting into all of this?
That's a great question. I think watching the taproom trading events is super helpful because I'm guiding my guest trader through a session.
Sure.
I'm saying buy here, sell here, you know, watch this candle, you know, I'm all of the things that are going through my head, I'm verbalizing and trying to help my guest trader understand. Well, there's a ton you can learn just by watching those events. These boot camps have been invaluable to people. Like, I think that, you know, just attending the boot camp really solidifies the entire concept behind process. It's process over profits, right? It's what you do. Don't look at the profit. Look at what you do in the market. Nail that down so you get the results that you're looking for over and over and over again. The profit will follow, if that makes sense. And so I think the third thing I would say is learn to take the losses, right? Man, we are so prideful as people. I mean, we just do not like to see a loss in the account.
That's
I know
true.
that. I mean, I've seen it. I've seen it in myself. I've seen it in everybody I come in contact with. We just have this huge dislike of taking a loss in an account. And I think one of the aha moments, I've seen it at these boot camps, is how important it is to take those losses. You know, I try and say in my sessions, I book the losses, peel this off, reduce the size, but I don't think people really get it, you know, until they're like at a boot camp like this where they can see firsthand they're taking trade for trade. I'm coming out profitable, taking losses, they're coming out incredibly upside down because they failed to take those losses.
Yeah.
And I think that's probably one of the most difficult things for a person to figure out in their trading session. So I think that, and it's hard to say, you know, take a loss. Like I can say it till I'm blue in the face, but are people going to really understand what that means?
Right.
It's going to take some practice getting through that.
Yeah, it's a learning thing to like what Todd always says, being a good loser.
Yeah,
right?
Todd. I'm a good loser and I know it.
Yeah. Well, I want to certainly thank you for taking the time this evening out of your busy schedule, because every time I've talked with you, I've learned something. And my biggest takeaway from tonight is, as a wobbler, to maintain consistency and process over profits. Those are my two takeaways. And I that's something that I'm getting better at every day, is in my personal trading, is just being consistent and being a good loser, right? Because that's a struggle. You got to remind yourself every day.
Remind it.
But it does get easier. If you have a process that says, this is when I'm taking my losses. And that's what the Wobble Technique gives me, is exactly knowing when I should take my losses.
Yeah.
Now the key is to listen and to do that process.
Agreed. The hard part.
Well, I appreciate it, Shawn, and we'll have to do it again sometime.
Look forward to it. Thanks, Dave.
All right.
Appreciate it.
All right, I hope you guys enjoyed that as much as I did, actually, having a chance to sit down and talk with Shawn. Honestly, that's probably the longest dialogue that I've had with Shawn in a long time. I mean, he is going. Of course, obviously we work together, so we have those kind of things, but it's always awesome to just sit down and have an opportunity to talk trading with him. So what are some of the things that you pulled out of that video? I'd love to know, maybe in the comments, to share just by watching that video, what are some of the things that you guys pulled? And I saw some of your guys' questions, and I appreciate that. But let's get to the biggest question that was out there on the comments. That is the battle of the beards. Whose beard is really better, right? No, I'm just kidding. Some of the comments that I'd like to maybe answer is, somebody had a comment in there that was like, what's the difference between a build and a fade? And that's a great question. And the Wobble Technique, like what Shawn was talking about in that presentation or that video that we just watched, it's a technique. You still have to have a strategy. So somebody else said they used the 89 HMA, which is a great strategy and video on our channel. Check it out if you haven't seen it already. But so you have your strategy, right? Wobbling is what you do inside of your strategy. So your strategy tells you to get in here and to get out here, or whatever. We'll just say that for an example. Well, the wobble is, how do you make profits while your strategy is coming to fruition? And the build and the fade are really simple techniques that we use inside a wobble. So basically, the difference between a wobble build and a wobble fade is, if you believe that your strategy tells you to get in at this price and exit at this price, your bias is a buy. So that is your bias. Your bias is that the market will tend to go up. So if you're getting into trades, you're getting into buy trades. And as the market goes up, a build is you're building in as the market goes up. Okay, and that's exactly that. Is a build is you're building as the market goes up, hits this layer or this level, which is another process inside the Wobble Technique. You're going to put more trades on. So every level that it goes, you stack more and more on, because you believe that your strategy tells you that this is when I should exit. Well, a fade is when you still believe that the market is going to hit here, but the market does what the market does, and oftentimes it goes down before it goes up into your strategy. And so on that pullback, you're buying on the downtrend. So as the market goes down, you're placing buy trades because you believe that it's going to go up. So that's really the difference between a wobble build and a wobble fade. Obviously, you still are overall biased on that one direction, but you're getting in as the market turns or in a downturn. Hopefully that answers that question. So I really enjoyed your guys' comments, your feedbacks. I'm going to just peruse through the chat real quick and see what else we got. Any other questions that we have. If you guys like this video, or you like having those chats with Shawn more frequently, periodically, let me know in the comments, or give me a thumbs up, that you like that. Let me see here. I'm on my phone, so Somebody asked when we're coming to San Diego. Well, we are actually coming to Southern California towards the latter part of this year. Again, we're going to be in Denver 2020. Excuse me, 2/20/2020. Say that 5 times fast, right? February 20th, 2020. So in a couple weeks, we're going to be in Dallas. If I said Denver, I'm sorry. We're going to be in Dallas, Texas. And then we're going to jump over to New Orleans for the next week. And so we have a lot of things planned. We're actually going to go out of the country and all over the country. We're going to be in Florida this year. So when we come, make sure that you guys join us. We'd love to meet you. Love to shake your hand and have a good time just getting around trading. Let me just go back up here. Love the comments. Wish all tap rooms were $2,500 account. There's somebody that posted a comment. If you haven't seen how to wobble a $2,500 account, it's a really valuable YouTube video as well. Somebody says that how do you identify or when you're in fix-it mode? And that's a little bit more involved into the time frame that we have to go over that. And so maybe I'll bring that into another live of how to know when you're in fix-it mode. I mean, most traders can be like, well, you're in fix-it mode if you're looking at your trades and you're going, right? So how do you do it? How do you deploy it? How do you navigate to get your trades back to either break even or mitigating that losses or placing new trades on to help recover those losses? Those are all part of that technique of how to get into fix-it mode that we can talk about. Just quickly, for me, whenever I'm in fix-it mode, usually means that it's broke through a major support or resistance and now I'm in an outside range. Boom, immediately I'm in fix-it mode. Now I have to start looking. But there's a lot of other trigger points that you need to know, which we don't have time to go through. I just want to hit everybody's questions real fast. Joseph, I appreciate your comment where you said you have to adjust the wobble for every different currency pair according to specific returns, ATR and volatility conditions. Yes, I mean, those are what we would consider pre-trade setups, right? You're going to get in and you need to identify a certain or key metrics, if you will, before you even start placing a trade. Definitely volatility, the ATR, the currency pair, the spread is a big one. You need to just kind of check, have this checklist of pre-trade, like pilots have a pre-flight checklist. As traders, we also have a pre-trade checklist that you go through each and every time, and you write these steps down until you start just to do them automatically. So if I didn't get to your question, if you could do me a favor and just repost it if I didn't talk about it or I didn't cover it. So I'm just going to go down to the last few questions. Again, if I didn't answer your question, just kick it, repost it. After this video, kick it in the comments, and I'll myself or somebody else will be able to answer that later down the road too. Appreciate that. Okay, there you go. Beyond probability trading with certainty. Thank you. There are some wobble videos. So Roberta asked if there's a wobble book. There actually are 10 wobble videos on the Trader on the Street channel, strategy guides that is actually sold. I think it's like $297 for that whole 10-part video series over there. So if you want some more information, you can buy that. And I've heard, I kind of have helped put those together, and I've heard that they're really good. Again, I'm a little bit biased because I was helping put them together. So you'd have to, if there's anybody else here that has seen them, go ahead and throw out your comments or your suggestions if they're good, or or where we can improve on. I'd appreciate that too. So, thanks, Joseph. I thought you were going to say those are really Todd. I'm like, no, it's me. It's not Todd, but it's really good. Okay, yeah, the spread could be huge on a 2-pip. All right, guys, so if there's not a whole lot of questions after that, I'm going to just tell you kind of my 3 takeaways from that video, or what I believe every trader, every wobbler should know, right? Obviously, building and fading is a huge one, okay? But the biggest takeaway that I got from talking with Shawn is process over profits. If you don't have a pre-trade setup that you go through, if you don't draw on your charts as you're learning how to wobble, if you don't get your levels and get your zones before you start placing a trade, you'll never get into that process over profits mindset. You need to have a process. You need to follow the process. You need to know exactly when your trade goes into fix-it mode. And that's all part of the wobble process. And so for me, the biggest takeaway is process over profits. Absolutely. Because then it takes the emotion out of your trades. So you're like, oh, this happened, I do this. Oh, this happened, I do that, right? And it's the same. And so the beautiful thing I love about the wobble technique for me is it truly is a wash, rinse, repeat type of system. This happens, do this, right? Execute this. If this happens, you're looking for a build, you're looking for a fade, you're looking for opportunity to hedge. All of a sudden, boom, a big abnormal candle comes out of nowhere. Well, you know what to do because that happens all the time during our trading sessions. You know exactly what to do, how to mitigate your losses, and that's part of the process. So number one takeaway is process over profits. And if I'm a new trader starting this out, I'm drawing on my charts, I'm writing that process down, I'm going through my pre-trade setup. Guys, I cannot tell you enough how invaluable that is to go through all that until you get that down to where you're just doing it and not having to think about it. So number one, process over profits. Number two is never risk more. Never risk more. I shouldn't say risk, never lose. Never lose more in one day than you can't make up in two, okay? So what I mean by that is that if you are a trader that likes to go for 0.5% a day or 1% a day, we'll just say 1% because it's easy math. If you like to hit 1% a day and you shut your trading off once you hit that, if that's your target goal, then you're on the other side. It should be if I lose 2%, I'm shutting it off. Right? Because I know that I can make 1% a day on my return, and I know I can do that, and it'll take me 2 days to recover that loss. So never risk or lose more in one day that you can't make up in two. Does that make sense? So we don't want to wipe out a week's worth of work in trading. So that's, to me, it's another second thing that every wobbler should keep in the back of my mind. I'm shutting it off. When is that hard stop for the day? Well, to me, it's if you lose more than you can recover in 2 days. Just a general rule of thumb. And then the last thing that I tell the third thing is look for high probability trade setups. Your early trades during the wobble technique are just that. They're early trades. They're testing the waters. Don't get so attached to them that you have to win on them. They're putting them in at obviously you believe that the market will turn, but you don't have confirmation yet. So that's what it is. It's an early trade. And so if you lose on those trades, that's okay. So don't stack in the beginning. Don't go bam, 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 and trade a bunch of trades in the beginning. They're early trades. So ease into the market with early trades. And then when you receive confirmation, when you see those opportunities that are higher probability and trade setups, that's when you start to go bam, 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 and gobble up the profits, guys. And to me, so the three things, process over profits, never lose more in one day that you can't make up in two. And the third thing is test the waters early, wait for that confirmation, then stack your trades. Okay, so, and as you learn your process, you'll see more of those higher probability. Is this a 60% probability? Is this a 70%? Is this 80%? Well, if it's 80, I can afford to put a few more trades on as opposed to a 50% probability. And that's the way that I look at the market, and I read the market, and I read, the candlesticks, the price action, the volatility, all that comes into play to help me to determine, is this move a good move to stack on or a move to just sit on my hands? And with that, those are the three things that I use every day when I trade the wobble that I hope that you guys can implement into your trading that'll help you to become a better wobbler, right? We're going to coin that phrase. So happy wobbling. And hopefully you guys are wobbling in your trading, not the 2 a.m. wobble. But with that being said, I appreciate you guys jumping on. Again, if you have questions, throw them in the comments. We'll get to them, and I'll answer them. So thank you very much, and we'll see you guys next week.